we are ready to get started. I wanted to thank everybody again for taking the time to attend this webinar. My name is Richard Madison. I'm an account executive with Q Vinci. What we're going to be going over today is financial reporting mistakes that you're probably making. I do want to go ahead and mention that we do have my colleagues working the chat window today. So if you do have questions during the webinar, feel free to go ahead and ask them in the chat window, and they'll get a response out to you right away. If you have questions at the end of the webinar, we'll be taking those as well. As a little bit of housekeeping, what we can do is let you know about some upcoming webinars that we have. On May 4th, a webinar that is primarily concentrating on accountants and adding diversity to the services that you offer. For May 18th, we have a webinar on how to set up and roll out Q Vinci. Also, these are some of the customers that are trusting Q Vinci with their financial reporting needs. As you can see here, we cover any business, whether it's accounting, whether it's something in the renovation industry, the fitness industry. Really, we are agnostic as far as the industries that we can serve and help with our financial reporting solution. As for the agenda today, what we'll be doing is we'll be talking about Q Vinci and give you an overview of the Q Vinci reporting solution. We're going to go over why financial reporting is so important, the big mistake as we see it in talking to our customers, as well as our prospective customers, some other mistakes that you can avoid by using something like Q Vinci, how to fix those mistakes, and then we will look at the application, some key features and benefits, talk about security, and open it up for Q&A. So about Q Vinci, we were founded in 2007. We are based in Austin, Texas. In fact, all of our staff is right here in Austin. It's including sales, including development, including support. We are the recommended reporting partner for the Intuit franchise program. And in fact, we were created and solved a problem that Intuit themselves couldn't solve. We're a top-rated reporting app in the Intuit App Store. And the great thing about our technology is that the meat that makes it all work is patented, so you know we're not going anywhere. Now, the patent on our technology is actually the first of several that we have in the pipeline. So stay tuned to Q Vinci because you'll be hearing more about the patents that we are going to be awarded. I'm going to go over an overview of Q Vinci's technology. As it says, in a nutshell, Q Vinci will plug the gaps in your accounting software. What does that mean? It does mean that there's a money savings. It does mean that there's automation there and reduction of risk because of the automation. But in a nutshell, really, the Q Vinci solution automates the collection, consolidation, benchmarking, and reporting of location-based summary financial data. It is reporting as a service, or RAS, as we call it. As you can see here at the bottom of the slide, we're agnostic with the accounting systems that we work with as well. So in addition to being agnostic as far as which industries we can best serve, and we can best serve all of them, it doesn't matter to Q Vinci whether you're using Xero, a flavor of QuickBooks, MYOB, or even Excel for your accounting system. We can actually link and sync with all of them. Now, the great thing with Q Vinci and the reason why reporting as a service in our solution is so impactful is that any business can benefit by eliminating the manual and resource-intensive, error-prone processes in financial reporting and replacing those with an automated system. Q Vinci happens to be robust, flexible, and a future-proof solution that generates real value for our customers in the form of financial and time savings when they are generating financial reports. Why is financial reporting so important? Well, the reason why it's so important is because financial data and reporting on that data is the basis from which all decisions in business are made. The more accurate and up-to-date the data, obviously the easier it is to make a good or sound business decision. Detailed, up-to-date books help you run your business more efficiently. No business that I know of can benefit from out-of-date data. The internet has made efficiency and agility the hallmarks of successful businesses, regardless of the industry that you're in. Visibility into areas where you can improve. Your sales may be the highest in maybe your particular industry, or they may be the highest out of all of the locations that you currently own, but your expenses may also be the highest. And where that may rank you as far as a successful business, maybe somewhere in the middle, maybe close to the bottom. Q Vinci can show you specific areas of opportunity, specific areas where you can improve, whether that's from an expense standpoint, whether it's adding to your marketing budget to generate those higher sales. Early error detection, being able to fix maybe simple accounting errors or transpose numbers, perhaps a decimal point in the wrong place as they happen, as opposed to looking for a needle in a haystack months later or while you're in the middle of an audit, is something that Q Vinci can provide for you. Avoiding unpleasant surprises. This is something that is paramount to any business. We've actually had customers who may have had one of the top franchise systems out there, and when they go in and look at those top producing franchisees from a revenue standpoint, everything looks great. But when they use Q Vinci for the first time, what they're finding is something, and this is an actual example, I won't mention who, but they found that some of their franchisees were not putting cost of goods in their bookkeeping. So although the top line revenue number may look great, without the cost of goods number in there, you don't really get a profit margin. You don't know how you're actually doing. When they used Q Vinci for the first time, they found those simple errors in generally accepted accounting practices that actually led to greater collaboration with their franchisees and an overall healthier corporation. So the big mistake with financial reporting, the big mistake is that most franchises just don't do it. There's a cost in resources, there's a cost in time, and in fact, most franchises and franchisees say that the only time that they do their financial reporting is when it's forced on them. This could be an increase in tension between franchisor and franchisee. It could be that they're only doing it because someone has asked them for it. The fact of the matter is that the financial reporting is a requirement, and it's something everybody should be doing. What a lot of franchisees depend on is point of sales data. And the reason why they're depending on the point of sales data is it's automated. It's something that they don't have a manual process which they have to undergo in order to get the reporting out to them. But there's gaps in point of sales data. And there's issues with relying on specifically that data as your financial reporting. As I said, collecting complete financials is too hard. Being able to see a P&L, being able to see real margin data or expenses or profit, it's a manual process right now, and it's one that requires so much time that nobody likes to do it. Franchisees with strong sales can still go out of business. The truth be told, if you owned 10 Taco Bell franchises, just as an example, and you had in your region the #1 and #2 revenue generating Taco Bells in your entire company, imagine that because only the POS data or the point of sales data is being used for the financial reporting, things like the COGS or cost of goods aren't being reported on, like in our previous example with a previous customer. And over time, those profit margins could dwindle because the cost of goods tends to keep rising on you. Well, what happens then is that those top 2 revenue generating giants in that particular environment could go out of business from a simple, generally accepted accounting practice not being followed through on. This is something that has happened and can continue to happen. And as a franchisee, if you were a multi-unit owner and you actually had those two stores in the region, imagine going to your annual franchisee conference and having to report to the corporation that their #1 and #2 revenue generators went out of business and you had no idea why. Other mistakes that can happen because of financial reporting not being done or not being done completely. One of those is not providing supporting documents. To meet financial reporting requirements, you have to have supporting documentation. Otherwise, how else are you going to verify the accuracy of the data that you're providing? On top of that, supporting documents can also be the difference between getting audited and not getting audited. In addition to that, omissions, leaving things out. Omissions in your financial reporting is the single best way to get your financial reports flagged for an audit, without question. Like, for example, again, the cost of goods not being in the financial reporting in our earlier example. Great way to get flagged for an audit by not having those. Neglecting day-to-day bookkeeping. Again, it may seem like it's more efficient to actually do the day-to-day bookkeeping at the end of the week, end of the month when you put everything in there. But the fact is that if you do day-to-day booking as opposed to end of the week or end of the month, the chances of errors, of things being missed, things being forgot about, goes down exponentially when you do that bookkeeping day to day. And finally, one of the larger mistakes that's out there is not choosing the right financial reporting software. There are two keys to finding the right financial reporting solution. One, finding one that is user-friendly, especially when it comes to creating the reports that you need. And second, finding a solution that can scale with any level of business growth that you're anticipating without a need for any infrastructure upgrade costs, without the need to upgrade everything on your side on the infrastructure, but being able to scale to whatever size you need. How to fix these mistakes quickly and easily? The short answer is Q Vinci. We are a cloud-based solution. As I said, it's reporting as a service. And what we do is we automate the manual process of collecting, consolidating, and reporting on location-based financials. Instead of having to ask for and have emailed to you financial reports from all over the place, you can actually make that process automated with our link and sync technology and be able to get daily updates to the condition of your business right down to the individual entities. Automation, which is the big part about Q Vinci, saves time, saves money, improves accuracy. Automation frees up resources for other client servicing initiatives to be fully explored. Q Vinci's alerts and health check features can allow you to make sure data is accurate, make sure it's complete, so you don't have the issue with omissions. Q Vinci's unlimited logins are something that will help you increase compliance, boost collaboration, and reduce risk by getting everybody working towards the same goals. One of the key things that we hear from not just franchisors and franchisees is that a lot of tension is created when there's not transparency in that financial reporting. With Q Vinci, transparency to financial reporting and peer benchmarking allow for best practice sharing. They show you a clear line of improvement at all levels of the organization. And I don't know a single business owner that doesn't want to improve, doesn't want to make more money. And finally, Q Vinci can help you identify fraud. So let's look at some of the key features here. And what you'll see here is, as you look at the slide, is the key features for Q Vinci. And we'll start with automated mapping to a standard chart of accounts. This is where Q Vinci has actually won its patent. By being able to standardize a chart of accounts, we can do a couple of things. It enables peer benchmarking. It enables consolidation in fractions of a second for any number of locations, whether it's 1, 2, all the way up to thousands. But on top of that, what we can do is reduce the complexity in your own environment by taking a chart of accounts that has thousands of lines of entries down to dozens. And how do we do that? We use our dynamic mapping, and part of that is done with the customer. Part of it is done with our technology. But we take things like rent and lease and put them in the same bucket where they're supposed to be, maybe under rent. Maybe you have construction costs or maintenance costs, and it's renovation instead of new construction. We'll put those in the same bucket if that's where they need to be. But what we do is we take things that are common terms that should be in the same place and put them in the same place. You may have items between charts of accounts between one franchisee and another where somebody has misspelled lease and somebody has not. And those would show up as two separate lines with two entries in your chart of accounts without the standardization. We can help fix that issue for you. For ranking, this is something where you can be collaborative, not only just franchisees amongst each other, but also between franchisor and franchisee. A great story here is Q Vinci actually had ranking on with a customer, and customer is able to look and see that they were first in overall income, but they were last in their expenses. And what they were able to say was, well, I'm going to go to the corporation and I'm going to find out what's going on here, because I'd like to have expenses more in line with maybe either the top 10% or the best in the company. It actually opened a dialogue between franchisor and franchisee when that person went and said, hey, what can I do to improve this and increase that collaboration? What I'm going to do now is show you what that looks like. So what we'll do is I'm going to pull over the Q Vinci application. Here it is. We'll go straight to our reporting tab, and we'll take a look at the ranking reports. Now, understand that what we're looking at in this ranking report is all of these reporting entities, and we'll see them side by side. We'll just do this calendar year to date and build the report. So as you see here, going down is each particular location, general categories, total income, gross profit, total expense, etc., the numbers, and where they rank in that environment. Now, if I were the head of the corporation, I could actually see that, and now I can focus my attention on the individual franchisees that may need a little extra attention. If I'm a single unit owner, here's what I would see. And what I'll do is I'm just going to pull up the Austin location. So now I own the Austin location. I can see in total income I'm closer to the bottom, but in the expenses I'm closest to the top. Expense margin, again, closest to the top. So what would I do? Well, I may reach out to some of the other franchise owners and say, hey, what are you doing to make that total income number go up? I may also reach out to the corporation and say, how can I improve this number? Just a way to self-improve overall. And what we'll look at next is things like benchmarking. Benchmarking is a great feature because this allows for self-improvement. So what I'm going to do now is bring this the application back in for you. And let's go ahead and make that big. And we'll go back to our reporting tab. Take a look at the peer benchmarking. Now first, I'm going to look at this from the corporate standpoint again, and this will be all locations reporting. Go to peer benchmarking here. Now what I'm going to do is it's based on the P&L. I'm going to look at the top 10% and do a comparison with the top 10%. I'm going to turn on vertical analysis, but from the corporate standpoint, I only want to see the percentages. That has a lot of value to me. And we'll build that report. And here you see on the left-hand side the top 10% and where they are as far as sales or income categories, and as you go down, cost of goods, etc. As you go across each location. Now from a corporate standpoint, it's great because I can look at Austin and I can compare them in their engine sales and say, hey, they're pretty close there, or in their engine work, they're much higher. But I can also look at the expenses or the cost of goods and say, well, we've got a little work to do here, or maybe I need to move somebody from the total Ford sales or from the Ford truck sales to the Nissan sales, or vice versa, so that I can get more profit out of the greater profit-bearing products. From a franchisee standpoint, we would see something like this. I've got the top 10% and then how I'm doing in comparison. The great thing here is that I can't see who makes up that top 10%. It's anonymous. And they can't see where I stand in there. So in comparing myself to that top 10% and seeing where I need to focus some attention, I'm not backing into anybody's financials. They can't back into mine. In addition to this, we do have the ability to do email alerts. So from a corporation standpoint or from a franchisee standpoint, I can look at a particular area on my P&L, whether it is income, whether it is the cost of goods, etc. And I can say I want to get a weekly email that tells me month to date where I am as far as rebuilt engine sales. And I'll get the actual numbers. If I had a target for rebuilt engine sales and I wanted to see where I am in relation to that target, I can get a weekly email and put that value of the target here, simply save it, and I'll get that email every Monday where we stand. The same can be said for things like expenses if you don't want to go over a particular threshold. So say, for example, let's look at operating expense and its utilities. I can get a weekly email that shows me month to date, either the actual number or a threshold that I assign. And if I go over that threshold, it'll notify me. If I wanted to see the actual numbers and get that as the weekly email, I can see that as well, so that I can essentially be agile enough as a business owner to adapt to a changing market, or see where there are problems and fix them as they come up. Now, in addition to this, as well as some of the other features that we have, we also have a custom report builder. I'm not going to go into the custom report builder at this time, except to say that the custom report builder really gives you some freedom. It allows individuals at any level within your organization to build and deliver high-quality reports, get them to the right targets, exactly to their requirements. You can use them to make simple changes to existing reports without recourse or drag on your IT department. We do have a webinar that was done a couple of weeks ago by my colleague Roman Delino that does go into detail on how to use the custom report builder. I would encourage everybody to take a look at that. If time allows at the end and there are some questions about it, we can look at it from a real basic standpoint. But again, that webinar is a much better resource in diving into the details of custom report builder. All right. So next we'll look at some of the other benefits with Q Vinci. All right. So some of the other benefits that we have. First and foremost, business decisions and quality business decisions are based on up-to-date, accurate, relevant information, and that's what Q Vinci provides for you. By being able to link and sync with your accounting system, and by pulling just summary financial data, we can give you a very accurate picture to the health of your business. From the dashboards on our landing page giving you the pulse or your blood pressure of your organization, all the way down to the detailed reports you can build in Custom Report Builder that get into the actual things that are going on, whether the business has a cold or whether the business is in perfect health. The true great part about Q Vinci is that it does increase collaboration. It leads to greater efficiencies. The benchmarking encourages not just healthy competition, but self-improvement. The great part about Q Vinci's solution is in its simplicity to effectively use and understand the data that exists in your system. We've got easy to digest dashboards, like I said, best practice forecasting through our Pro Forma tool, a custom report builder that gives you the option to take your data and create reports in response to market changes, or in response to maybe promotions or new products out there that you would like to run, allowing you to adapt to customer or investor requests, or to even gauge the effectiveness of products or promotional programs that you have running. One of the things that we do hear a lot about with Q Vinci being a cloud-based solution is security. And so what we will tell you about Q Vinci is that we are hosted at Amazon Web Services, same place where Intuit is hosted for QuickBooks Online. Amazon Web Services carries SOC 1, 2, and 3 compliances, HIPAA compliance, FIPS compliant, and DoD, or Department of Defense compliances. Only senior level employees can access the database, and really only with the permission of the customers. Q Vinci does not sync personal information, social security numbers, bank account numbers, credit card numbers. Like I had mentioned, we pull only summary financial data, not transactional data. Transactional data is a function of your point of sale system, and it's not something that Q Vinci will look at. And we do perform regular audits done by management into our system and make sure that everything is working correctly. On top of that, when you're talking about security and accuracy of the data, when Q Vinci syncs, we actually will perform 7 tests on the data to make sure that it's accurate and that what is coming through in the business intelligence that you're trying to get is also what you're looking for. So now what? What I have listed here are not only my name, but the names of my colleagues here at Q Vinci, account executives, one and all, and the business industries that we cover. You are able to contact any one of us via email, via phone. We'll be happy to answer any questions or run detailed demos specific to your organization, individual demos if you like. As you can see with Roman Delano, he handles things like food and restaurant, medical and dental, banking, etc. Caitlin Underwood handles home health care, property management, real estate, investing. Myself, I specialize with children and education, cleaning, restoration, entertainment, travel and lodging, and Marty De Los Santos, who handles things like automotive, business services, nonprofits, specifically the religious, so dioceses out there, and moving and storage. And then the bigger one, the retail. But again, with our email addresses there, feel free to contact any of us anytime for a detailed demo and a detailed picture of what Q Vinci can do for you. And as a last little bit of housekeeping for our webinar, you can actually find Q Vinci on the Intuit App Store, and please give us your feedback. From now, right now, actually, we have a contest running where if you do a review of Q Vinci, we'll send you a $10 gift card to Starbucks, and we'll also put you in the running for a grand prize of $1,000 that we'll be handing out later this year. And what I'm going to do now is I'm going to go back to the slide that had our future webinars on it and open the floor up for questions. Anything about the presentation that you'd like to take a look at, or any questions that you have overall? So a question has come across as to how pricing works with Q Vinci, and specifically if we charge for the number of users. With Q Vinci, you have unlimited logins, so anyone at any level within your organization can be assigned a login, and at the corporate level, you can actually assign permissions so that they can see, or you can direct them to see only the things that they need to for their particular part in the company. At the corporate level, you can see everything, or at the admin level, you can see everything, but then assign the permissions from there. As far as the cost of Q Vinci, we have a couple of pricing models. The first is monthly, where we charge $14.95 per reporting entity per month. The reporting entity could be a QuickBooks file with a single location in it. It could be a QuickBooks file with multiple classes. And if, in that case, if we are linking and syncing by class, each individual class would be the $14.95, as each individual class would be a reporting entity within Q Vinci. The second pricing model is yearly, and that is $149.95 for Q Vinci for the year per reporting entity. That particular pricing model actually gives you a savings of about 2 months over the monthly model. So a question has come across on how to export reports from Q Vinci and get them to the appropriate parties. So what I'm going to do is I will go ahead and bring the application in again. Here we go. And if we were to look at the P&L as we did before, and I'm just going to run a basic P&L here. But as you can see up here, any report that you want to save, and you can do that by memorizing the report, but you can also save it to the PDF and to Excel, and then email it out. So you're not limited by really anything in our reporting. If you can save a report, then you can also export it to PDF or to Excel and send it to whoever may need to see it. Also, in addition to that, if you look at the standard 12 reports that we have here, all of these would be able to be exported to Excel or PDF and then be emailed. So the question has come across, how do you handle franchisee reports that are received in a non-standard manner? And really the answer there is it depends on the manner in which you're receiving them. If it's something that they have cobbled together themselves, if their chart of accounts is all over the place, that is something that we would have to look at getting them in the standardized chart of accounts first, and then and normalizing the reporting there. But again, it will be dependent on what that non-standard part means. Again, I wanted to take a second, thank everybody for joining us today for this particular webinar. Um, we'll let everybody know we're going to go ahead and leave the question and answer session open for a few more minutes. So if you do have any questions, feel free to type them in the chat window. We'll go ahead and get those answered. Thank you very much for your time and for attending our webinar today. Look forward to presenting to everyone on May 4th and May 18th. As you can see on this last slide, adding diversity to the services you offer and how to set up and roll out Q Vinci. Thanks. Have a great day.